Hello everyone and welcome back to Wealth Workout. So today we'll be talking about how you can make money even in the times of crisis by investing in shares. And this is really important to understand a few fundamentals here. We are going to be talking about some type of companies that are affected by the crisis and the different effects of the crisis on different companies. So for example, let's look at Regeneron Pharmaceuticals, the company in the pharmaceutical sector. This company has very strong finances, and that's the reason I'm picking this stock. Ensure you pick a similar stock or at least something that is really strong and doesn't have a likelihood of failure. This company announced that it will be working towards a cure for the Covid-19, and you can see the share prices have shot up from then. It went from $400 to $540 in less than 2 months. And that is again above 25% in less than 2 months, which is great gain, right? Now, this is one stock that directly addresses the crisis and helps in defeating the crisis or getting over it. And these type of companies that work against the crisis are the ones that are definitely going to make money. People are going to pay them for sure. But here's the catch. The market cap, meaning number of shares into the market share price, is the market cap. Now, it increased $100 per share, right? The increase in the market cap in totality basis must be in billions, and for the entire pharmaceutical sector many companies have experienced this gain. Here's the bad part. The increase in the market cap of these companies put together is way above or way more than the anticipated increase in the revenues that is expected. Yes, you're right. Now how does that translate to be a bad news? A share price usually goes up when the revenues increase or the margins increase, increasing the profitability. But in these companies, it is purely due to market sentiment. The market has clearly overreacted. These companies are definitely not going to make as much revenues as the market has anticipated them to, and the increase in share price is way beyond what should be. They are not going to make some heavy increase in revenues. No, there definitely will be, but the market has clearly anticipated something way over that, and this means that the companies may be overvalued. A few months from now, they might end up being overvalued. Now, that is also a good time to short the share, but it's not easy. But here we are not to talk about shorting, we are here to talk about buying. So as soon as you would have seen that the outbreak was contagious, and it was more contagious than a common cold, right? Something that is not having the power to kill that much, but it spreads like anything. At the same time, it's a virus that has an incubation period of, let's say, 7 to 14 days, meaning it goes undetected for a very long time. Now, this is medical science, nothing related to finance, but it is really important to understand and calculate how much it will spread. Once you know that it can spread to a lot of countries and this will bring the world down, you will understand the potential impact that it could have on the share prices of these companies. They would be getting more and more revenues, and that's when you should have gone in. I think 20th of February or even I think 15th or 13th February would have been a great time to invest in these stocks, given the knowledge that was about virus that came out during some time before that. Someone who was up to date and knew what it was like would have definitely made money. So you need to understand exactly the details of the crisis and how it works. In this case, how the COVID-19 virus works. Now coming to another company that is not countering the effects of COVID-19 but benefits from its byproducts. Byproduct of the COVID-19 is that people have to stay at home. Many would be working from home, but still majority don't, and they have to get some sort of entertainment. Now here's one more intelligent thing you have to come up with. If the entire countries are shut down or the economies are completely coming to a halt, it's but obvious that even the entertainment industry would be, right? So the TV shows and drama serials that come up on TVs won't screen new content. People will get bored, people would want something new, and that's how Netflix was going to benefit. But the problem was, this is a company that did not directly address the crisis and counter it. This was the company that was going to benefit from a crisis, and that's why it was definitely not something that would have gone up or down, and people were still confused. Regeneron, you can see they were not. And this drop and fall is not at all attributable to the COVID-19 outbreak. Rather, I think this was a great time to invest even before it was like on 16 Jan. I think even that was a great time to invest. So now Looking at Netflix, what do we understand? This company has experienced a fall. The market was irrational. It's not being dumb. The market was just irrational. People didn't understand what to do. And soon they realized that this company has nothing to do with traveling or going out. Rather, the more people stay in and subscribe to their subscriptions, the better it's going to get, right? Since it's a video streaming service. So that's the business model. People didn't understand that before. Now, why did it happen? Because people didn't see the company directly addressing the crisis. Now, what do you have to do to trade? For a company directly addressing the crisis, if you're way before the market and you don't see a very good jump, it's a good time to buy. Make one trade right away, buy it immediately. For a company that does not directly address the crisis but benefits from its byproducts, you may have to make 2 trades. So you may immediately go in, right? And you don't know when to go in, right? But as soon as you make your choice and make up the logic and understand the business model, you could have bought the share right here on 20th of February. That is the same date for Regeneron when it started going up right here, right? You could have bought the share right then, and then it would have still fallen down, and you could have bought another share right here, even at this point in time. And that's why you have to keep 2 trades for these kind of companies. Don't put all your money in here because you will just reduce your returns, even though you still wouldn't have lost cash from 386 to 440. Okay, that's roughly $55, and it's not a small gain. But $55 over $386, not a great gain, I'd say. A great gain would be if you invested right now at 386 and also at 315. Imagine total investment put in is $700 and you're going to make 439. Let's say you just took 1 share over here and 1 share over here. So the total investment would be $700, meaning 2 shares. And you could cash it out right now at 439, meaning you would get close to $880. Now, if you check that, that is $180 gain straight away. And it's not a small gain. $180 gain over $700 of investment is not a small gain, right? That is something you need to understand, right? So this is the kind of stock and this is the way you trade. Lastly, let me top it off with one other company. Let's stick with our one of the favorite stocks, Apple. That's the ticker, yeah. So if you go to Apple, this was anticipated and the market reacted in a way that's good. And this was actually anticipated because the supply chain was blocked in China. But you can see as soon as the news came out that Wuhan had started to recover, it started going up again because the supply chain increased. Now the thing about this company is, the one thing I'm going to concentrate is, this company has something unique that the previous 2 companies don't. They are freaking rich. They are too rich. They have a lot of cash. They have a lot of finance strength. But this kind of company definitely would increase its share, get an increase in its share price soon. So I think it would be a very good time to wait for the companies that are affected by the Covid-19 in an adverse way. This company neither benefits from it nor addresses it, but it is the company that gets affected from it. For these companies, you wait and spot a stock that is very strong financially and wait for the share price to fall down. You basically buy it at a very good discount because it goes up in no time. Look at this, 240 and it's right now at 286. In difference would be from 16th March to 17th April. That's just 1 month. And this is bound to go way above $300 even in the next 4 months. And I predict it would reach $350 somewhere in the next 4 or 5 months. Imagine that gain you would make by investing at 240. I'm not talking about the least level because it's not easy to predict. Imagine you just went in at this point in time, 240. And you would make up $350. Imagine 100 rupees gain over 240 rupees of investment, right? So this is what I'm talking about. Find a good company that has amazing finances and is very strong to sustain. You will get the share at a very good discount. Then this is the type of company I was just talking about. That is the company affected by the crisis. We saw one company that directly addresses the crisis, that is Regeneron, and we also saw Netflix, which benefits from the byproduct of the crisis. So this is about how you can invest in all these type of stocks and identify these type of stocks. Thank you for watching, guys. This is Wealth Workout. If you like the video, please leave a thumbs up. It will help us a lot. And if you love the video, do subscribe. Thank you for watching.